Hello and thank you or welcome to another edition of the Nerd Enterprises Incorporated webcast. What do we do at Nerd Enterprises? Mostly what we do is the accounting and bookkeeping. And to be a little more, general I guess, about what we do, maybe it's more specific to put it in these terms, but what we really do is we help businesses figure out how to become more profitable. And the way that we do that is by going through what's at the core of your business, which of course is the accounting and bookkeeping. And the reason I say that is because everything you do in business touches the accounting and bookkeeping at some point. Because everything you do in business involves either taking money in or putting money out. And it's a question of having the information about where you've gotten the money from and where you've spent the money, and having that information organized in such a way that makes sense and that makes it easy enough to analyze your business, that information can then be used in order to help you reach your goals and get to where you want to be in terms of your business. We can also look at it from the standpoint of figuring out how you can increase efficiency, which is going to save you money, free up your time, because if your business is doing well and it's profitable, you're going to have more reliable. It's going to be more reliable. You're going to be more comfortable leaving it at some point so that you can have more free time and enjoy your time with your loved ones. And of course, we can look at your business through the accounting and bookkeeping from the standpoint of what's working and what's not. And this way we can look at your resources, your assets, your cash, the equipment you own, and figure out where we want to invest those resources in order to make your company more productive. But all of that has to start with proper accounting and bookkeeping. The other area where we can really help you and add value is nowadays it's harder than ever to get loans from the bank. Let's say you already have a line of credit for $50,000 and your interest rate on that line of credit is 8%. Well, wouldn't it help you to have that line of credit increase to $100,000 and maybe get the interest rate reduced to 5%? Is it impossible to do? No, of course it's not impossible to do. But the first thing your bank is going to ask you for when you ask them for this is they're going to ask you for a balance sheet and a profit and loss statement. And the whole key there is to hand them a set of financial statements that instills confidence in them, that your information is accurate and reliable. They're going to have questions, and hopefully if your financial statements are formatted well, they're going to be questions that are based on the operations of your business, which you can easily explain away and say, oh, well, here's what happened in our business. That's why we spent a little more money on advertising or whatever it is. But what should never happen is you shouldn't ever have to hand them a set of financial statements that they have to turn back to you and say, this is a mess, I can't process your loans with this, I need you to clean that up. Not only is that embarrassing to you, but it reduces their confidence, so that when you do turn around and hand them a hopefully cleaned up set of financials at that point, they're going to scrutinize it a lot more closely because they don't have confidence now. And they need to assure themselves, because their butt's on the line, they want to make sure they're not lending money to somebody who really can't afford to pay it back. Because then they get scrutinized and questioned, why did you loan this company money? So it all comes full circle, but the most important thing is what's at the core of your business, which again is the accounting and bookkeeping. And that's why we're focused on really being able to help companies. I've come a long way myself in terms of starting out at 28, moving to California, nothing but the shirt on my back, practically, literally, sitting outside of an office building, eating my brown bag lunch because I couldn't afford to go out to eat. That's where I was 10 years ago. But because I understood these accounting principles, I was able to put together a company and build a business that's become very successful over the years. And now I'm able to use a lot of the principles that I've practiced in building my own business and help other business owners learn how to apply the same principles and build their businesses and increase the productivity, increase efficiency, free up time, and ultimately enjoy life and what you do that much more because you're excited about it. So hopefully that helps clarify some things for some people, in case some people out there had a question about what it is that Nerd Enterprises really does for business. Really, the product that we have is the relationship that we build with you. We're there for you. We're here to help you. We're here to help you understand more about your own business. And ultimately, we're here to help you achieve and realize your dreams. With that, I'm going to bring you over into our sharing screen, and I'm going to do a follow-up webcast based on last week's webcast, which concerns itself with accounting for security deposits. If you didn't see last week's webcast, then email us at classes@nerdenterprises.com, and I'll be happy to email you the link so you can watch last week's webcast. Last week we went over how to account for receiving a security deposit from a tenant. And we received a $2,000 security deposit for the tenant who was moving into apartment A. Well, this week I want to show you what to do when that tenant moves out and it's time to repay that security deposit. The obvious thing, of course, is we have to write him a check. So I bring up my check writing screen. From here it's pretty simple. When the tenant is an actual tenant and set up on the books, I'll have the tenant's name in there. And the first thing I want to do is say, well, hold on a minute. I don't just want to write a check for $2,000, because let's say after I've inspected the apartment, I realize I need to hold back $300 because of some wear and tear, or damage beyond normal wear and tear. So the check I'm going to write is for $1,700. But the problem is I have to zero out that security deposit account, which is for $2,000. So I do that. I put in the full amount, but now I have to deal with the negative $300. And where do I put this? Well, there's two places that are possible, really, in terms of where you can put this. What most people, frankly, will be inclined to do is they'll want to put this to a repairs and maintenance account. Why? Because when I hold money back from a security deposit, the theory behind it is that it's designed to offset the cost I have to go to, and it's usually repair and maintenance costs in order to get that apartment ready to be rented again. Well, that works great in theory, and it is accurate to do it that way. But I have a way that I like to do it, which I think shows a little better formatted financial statement at the end of the day, and I'm going to demonstrate. I prefer to put it in security deposit with holdings and set that up as an income account. First of all, that means that we're calling it exactly what it is. I'm withholding money from a security deposit, and it's money I'm keeping that was originally given to me and was supposed to be paid back, which means to classify it as income is more appropriate, and I'm going to show you why. Remember, I was talking a couple of minutes ago about properly formatted financial statements. Well, let's run a profit and loss now and see what that looks like. See, right now what I've got is I've got a positive $300 instead of a negative $300 expense. Let me show you what I mean. Let's say I put this, and I'm just double-clicking to drill into it, to repairs and maintenance. The expense account. Save and close. And yes, I'd like to refresh the report, please. Now look what happens. I have negative repairs and maintenance expense. Now let's say I actually go to pay my handyman, and it's AAA handyman. But let's say I really only had to pay him $150. Let's say the market value of the repairs was $300, but I have a good relationship with AAA, and so I only have to pay him $150. Well, look what happens. Now I have a net negative $150 expense. Again, I present this profit and loss to the banker to get a better deal on my line of credit. They're going to question this. There shouldn't be a negative expense. It doesn't make sense. Why would you ever have a negative expense? It doesn't matter. I mean, and of course I could explain this one, but again, it goes to the issue of building their confidence that I'm providing them with financial statements that are accurate and easy to explain and understand, because that person at the bank may very well have to explain what they give approval on to their manager or supervisor before they give the approval. So look how much nicer this looks. I have no negative numbers this way. I've got $1,000 in rental income, I've got a $300 security deposit withholding, and I've got repairs and maintenance that I've spent of $150. This is what I'm talking about. These are the kinds of things that we understand how to do. That a lot of bookkeepers, it's not even that they don't understand how to do it, but they just won't think in these terms because their job is really just to get the transactions posted and get the accounts reconciled. It's having somebody like me with that macro overview sense of how I want this stuff to look when I go to present it to a bank, and I want to make sure that it looks presentable. Furthermore, to be able to do the kind of, sort of back-end analysis that you as the owner are going to want to be able to do with me, we want to present it in a way that makes sense to you. And we want to present it in a way that you and I can easily go through it and identify where you're making money. Let's look at the assets you have. How much cash do you have in the bank? If we're going to spend money, where should we be spending it? Are we spending money on things we don't need to? Well, that all starts. The ability to do those analyses all starts with being able to have properly formatted financial statements, and that comes from having bookkeeping that's done very well. That's done not just to get the job done, but that's done with a little bit of foresight into what do I want this to look like when I'm finished. And that's what we're able to provide. That, quite frankly, I don't think a lot of other bookkeepers out there are able to provide that. I don't think they have the kind of knowledge and understanding of how the bookkeeping impacts the accounting to be able to provide you with that. And that's where our company can really add value, because I have the accounting background and I have the knowledge to be able to do that. And of course we know QuickBooks well enough to be able to do that for you. So visit us on the web at www.taxacademy.com. www.nerdenterprises.com and go to the accounting page. By the end of next week, we're going to have some articles that I've written posted up there that go into a little further detail in describing what it is that we can do for you on the accounting and bookkeeping side. So again, www.nerdenterprises.com. Hope you enjoyed the webcast, and I hope you have a great week.